Warren Buffett's success story is one of patience, discipline, and unparalleled investment acumen. Born on August 30, 1930 in Omaha, Nebraska, Buffett showed an early interest in business and investing. As a child, he displayed an entrepreneurial spirit, buying packs of gum and selling them for a profit. At the age of 11, he made his first stock purchase, investing in Citi's Service Preferred for $38 per share. This was just the beginning of what would become a lifetime of smart investments and careful decisions that turned him into one of the wealthiest people in the world. Buffett's early interest in investing led him to pursue a degree in economics at the University of Nebraska. After graduation, he worked for a short period as a stockbroker before studying under the legendary investor Benjamin Graham at Columbia Business School. Graham's teachings on value investing, finding undervalued stocks with strong fundamentals, would profoundly shape Buffett's investment strategy for the rest of his career. Buffett admired Graham's philosophy, which emphasized purchasing stocks for less than their intrinsic value and holding them for the long term. This approach would form the backbone of Buffett's later success. After completing his education, Buffett went back to Omaha and started his own investment partnership in 1956, initially with $105,000 in capital from family and friends. The partnership allowed him to invest in a diverse range of businesses, and his philosophy of value investing began to show promise. By 1962, Buffett had amassed enough capital to start buying control of companies. One of his first big investments was in a textile company called Berkshire Hathaway. He initially purchased shares because he believed the stock was undervalued, but as he saw the management was not operating the business efficiently, he began buying more shares, eventually taking control of the company. Buffett transformed Berkshire Hathaway from a struggling textile manufacturer into a diversified holding company. Instead of running the company as a traditional business, he used it as a vehicle to acquire other businesses and make investments. His disciplined approach, focusing on companies with strong management, reliable earnings, and promising future prospects, paid off. Buffett's willingness to invest in companies that were often overlooked by others set him apart. He bought large stakes in companies such as American Express, Geico, and Coca-Cola, recognizing their long-term potential when others were skeptical. What set Buffett apart from many investors was his patience. While other investors might have been obsessed with short-term market fluctuations, Buffett took a long-term view of his investments. He was not in the business of buying stocks to quickly sell them for a profit. Instead, he looked for companies that had enduring competitive advantages and strong leadership. And he was willing to hold those investments for decades. This long-term approach was pivotal in growing his wealth. Buffett's investment style emphasized simplicity and clarity. He focused on businesses that he understood well, famously saying that he only invests in companies whose businesses he can easily comprehend. He also famously avoided high-tech companies, seeing them as too volatile and speculative, preferring more stable, established businesses. His approach to investing was rooted in common sense and discipline, often emphasizing the importance of staying calm and focused during times of market volatility. As Berkshire Hathaway continued to grow, Buffett's reputation as a brilliant investor spread. His annual letters to shareholders became legendary for their clarity, wit, and insight. They not only outlined the company's financial performance, but also shared valuable lessons on investing, business, and life. Buffett's philosophy of buying good companies at a fair price and his commitment to ethical business practices earned him the respect of investors around the world. By the late 1980s, Buffett had transitioned Berkshire Hathaway into one of the largest and most successful holding companies in the world, with interests in a wide range of industries, from insurance and railroads to utilities and consumer goods. His ability to identify undervalued companies and turn them into profitable ventures led to astronomical gains for his investors. Houses in Africa erupted in value 600%. Berkshire Hathaway's stock price skyrocketed, and by the 2000s, Buffett had become a billionaire many times over. Despite his enormous wealth, Buffett has remained grounded and known for his frugality. He still lives in the same house he bought in 1958 for $31,500, and he continues to drive relatively modest cars. His lifestyle is a stark contrast to the ostentatious displays of wealth that often accompany such success. Buffett's simple life reflects his belief in the importance of making smart decisions with money rather than chasing luxury. Buffett's success also includes his commitment to philanthropy. In 2006, he announced that he would give away the vast majority of his fortune to charity, with most of his wealth going to the Bill and Melinda Gates Foundation. He has kept his promise, donating billions of dollars to causes such as global health, education, and poverty alleviation. Through his charitable efforts, Buffett has demonstrated that wealth is not just about accumulation, but about using one's resources to make a positive impact on the world. Buffett's life and career offer lessons in hard work, discipline, and staying true to one's values. He is known for his ability to stay calm during times of economic turmoil, and his decision-making process is built on a foundation of patience and rational thought. He has repeatedly emphasized the importance of doing what you love, learning continuously, and being patient in business. His approach to investing, rooted in understanding and discipline, has inspired countless individuals to pursue long-term goals rather than short-term rewards. His story is a reminder that true success often comes not from quick decisions or following trends, but from focusing on the fundamentals and remaining committed to the long haul.